What are oscillator indicators? So the key characteristics of an oscillator indicator is that it is bound with specific ranges. So you'll often see these 20 to 80 kind of ranges on things like RSI or MACD, and it basically oscillates around zero, around the mean. It is used to identify overbought or oversold conditions. So the signal often triggers potential reversal points. It often signals for them. These work best in ranging markets because, like Michael Noss very importantly mentioned, things can stay overbought or oversold for a very long time. And if this is a ranging market, then we're trading, up and down in a range, and that'll be a lot easier to identify that topping action into the top of the range. Whereas if we're not in a ranging market, we're breaking out of a range, then that RSI can just stay overbought as price rips higher. You do a lot better trading only overbought conditions long and only oversold conditions short than vice versa, than trying to fade these. These are not a holy grail. What they are is very useful for when you're able to apply them in the right circumstances. Momentum is like the most important aspect of the market that I feel like doesn't get talked about enough. So the momentum's going up, but the chart is lagging and coiling, and then the chart explodes up. So that's why watching this momentum can lead to basically front-running moves. How you would trade a reversal strategy with these. First off, you want to identify that the RSI is overbought, so 70 or over, or oversold, 30 or under, and you wait for RSI to reverse and cross back through that threshold level there, and then confirm with price action. We would use the MACD on maybe a daily or a 4-hour chart. I really like these for swing trading. I feel like they're very comfortable time periods, and they give you just about all you need for framing a trade, and then you can go into the hourly or 15-minute or whatever to really pinpoint your entry. I think the MACD signals are pretty strong on these time frames, and then you combine this with just basic trend analysis on higher time frames, which is always a huge part of any good system, right? We can't focus on any one time frame. We got to zoom out and kind of build our confluence and our directional bias through the time frames. Stochastic reversal strategies would look something like this. You would need to identify clear support and resistance levels on the shorter time frames, like 1 or 4 hours for day trading, and you combine this with trend direction on a daily chart. As always, me, gotta have multiple time frames in my favor if I take a trade. We will talk about multiple oscillators briefly here. So you can do RSI plus MACD, and you can, for example, use RSI for the overbought and oversold levels, and then MACD for the trend direction momentum. And when they both align and you get that crossover signal on the MACD and everything's looking fine on the RSI, then you can start to consider that a confluence. The MACD plus stochastic is another one you can look for. So the MACD for more of an overall trend bias, and then you can use the stochastic for that precise entry because it's a really short look back window and you're just comparing what price is doing now to what it was doing just a little bit ago.